Hello, and thank you for joining us here on the floor of the NYSE for this week's MacDesk Flow Report. I'm Rebecca Darst from the MacDesk. We are your window to the trading floor for real-time intel and activity in listed stocks and equity derivatives. Major indices are trading a little higher right now. We're up 20 points in the Dow, which isn't too bad given that we opened lower and given a stream of disappointing data points hitting the tape this morning from multiple continents. The cavalcade of data misses started during the overnight Asia-Pacific session, with China's HSBC flash manufacturing PMI number coming in at a weaker than expected 48.7% for the month of May. This was down from 49.3 in April and marked a 7th straight month of declines in that data point. Next came a string of disappointing producer manufacturing index releases across the European continent. German, French, and Eurozone manufacturing PMIs came in below street estimates. The UK was out with a negative revision to its Q1 GDP number, and the monthly German IFO survey of business leaders showed a weaker than expected read on business confidence in Germany due to, what else, anxiety about Greece's future in the Eurozone. As has become the drill lately, we saw the euro take a hit on the news, setting its lowest levels in nearly 2 years when it bottomed out at a reading of 125.61 against the dollar right around 4 o'clock this morning. The currency cross has since recovered a bit off of those levels. We continue to keep an eye on yields in the longer-dated German bunds and UK gilts, as these have been hovering around record lows, giving the credence to the chestnut which is making the rounds on Wall Street trading desks that European bond markets are offering return-free risk these days. U.S. data followed in suit with a very slight decline in weekly jobless claims, but the bigger story was the April durable goods number, which came in short of analyst estimates. The headline number was a slight increase of 0.2% month over month, but the bigger disappointment lay in the core number, excluding transportation, which showed a decline of 0.06% month over month. The street was looking for an increase. Instead, they got a decline, and the first back-to-back declines in capital equipment orders in a year. Initial read on the durable goods number from the analysts that we follow has been one of increased concern over the implications for momentum in the economic recovery. Again, on a number of these macro data points here in the U.S., analysts have been looking for sustained improvements, however slight, but we continue to have trouble lifting off of plateaus. In the option trading pits, we are seeing flattish, rangy action in the VIX, which was up very slightly at its last print to read 2240. In early trade, we've been seeing some block-sized interest in July calls at strikes 3250 and 4750. These might be position adjustments or spreads trading by strategists who are looking for protection further into the summer. There's currently about a 2.5-point gap in the readings between the spot VIX and the June VIX future. July and August are both pricing VIX above a reading of 26. For additional market insights, be sure to check your inbox at 1 p.m. for the midday. For now, that's it for me, Rebecca Darst, for the MacDesk Flow Report.